Hey guys, it's Simon. Wanted to do a quick trade review from today. Spend a quick, maybe 10 minutes going through the trades and explaining the spreadsheet and the decision making process. Okay, so quickly, let's go through this. First of all, open drive lower. Always a concern out of the gate, right? You want to know what open drive lower looks like? This is picture perfect. Open drive lower, right? Also noticed almost immediately we were not able to get a 50-60 retrace from the original open drive lower, and we were kind of caught in a conundrum, right? We hadn't had gap fill, we hadn't had half gap, but we also were unable to attain 50-60. But I want to show you something. In a healthy market, we get 50-60 retraces. When we can't achieve a 50-60 retrace anywhere along the way, and if you look from the swing high to the swing low all day today, did not matter where you drew this down, we never achieved a 50-60. But additionally, even if you look at it from the last swing to the next swing, right? We were not able to get, this is the only place, from this swing to this swing is the only place we were able to get a 50-60. It was localized. See this here? Here to here, 50-60. But not able to break it. From here to here, 50-60. Not able to break that. You only get this type of action in a strong trending market, whether it's trending up or down. That's the only way you get that repeated action in the 50-60. So, first clue, we were unable to get a retrace. But the biggest warning of the day today came here. So everyone asked me, we came damn close to a swing long. Several people asked me, do I want to take a swing long? And I said, I just haven't gotten the setup today. So let's take a step back. Why do we not trade in the first half hour? This is why we don't trade in the first half hour. If we go back and look at our chart, right? And for any of you who've been with me any period of time, you know this is an area I get run over very, very easily to the downside, and in the first half hour, exactly because of this reason. And it doesn't take much to go, okay, this zone gets busted, and if it's a really weak market, the next zone gets busted, and the next thing you know, in the first hour, you've taken two stops back to back, and it sucks. We avoided that successfully this morning. That goes as a check mark in the journal. Okay, next. When we look through here, we go, hey, there's no counter rotation, right? So even when people were asking me over here, hey, do we have a swing long? Do we have a swing long? Or it's not triggering a swing long yet into Tuesday's high. This area was tricky. Why was it tricky? Because just like we swept here, okay, don't fool yourself. I'm pretty sure the only reason we didn't sweep over here, so let me draw this out. I'm pretty sure the only reason we did not sweep here like we did over here was because of Apple coming up over here. Okay, Apple saved this market from getting rolled over to the downside early in the morning. It's why we consolidated sideways. Okay, so the rule of not trading in the first half hour saved us all stops out of the gate. That's why the rule exists. Well done for hopefully no one took it. I didn't get any feedback on anyone trying along this morning, and mission accomplished as far as I'm concerned. Next, I got a mediocre swing long. Why do I not get geeked up about the mediocre swing longs? Because it usually results in price action that looks just like this. Just make a note of it, right? It was obviously tradable to the upside, and it was obviously a 10-point rotation, but it was pretty flat relative to the downside that we had. I don't think I need to say much more about that. And then finally, the move to the downside in the afternoon. Okay, when we were in here, I was screaming at the top of my lung, hey, the market sucks here. There's a problem. Look at the divergence between what's going on in ES and the price action that we're getting at the same time in NQ, right? This is that same period of time. Look at the rotation back up. This is a 30-point rotation. We're not getting jack in ES. So I want y'all to stop for a minute and think about this, right? How much pressure does it take when one market, NQ, is ripping? Imagine what kind of size would it take to be sitting on top of that ES market. Well, while this is ripping like this, how big a seller do you have to generate a flat move like this where we can't accelerate over the last swing high, right? So this was the last swing high over here. If you look on NQ, we blow out that last swing high. ES does not follow. This was a huge tell, but you have to imagine in your mind, what does that mean? That means there's someone with a really, really big portfolio that is offering out on top of that over and over and over again. As a matter of fact, he's selling as many contracts as he can possibly get his trader to shove down someone else's throat, right? He's feeding it to him. He's got a pretty much a perfect situation. He wants out. He recognizes that we failed in 1989 and he wants the hell out. He thinks we're rolling to the downside. Okay? So this had to be very concerning. This is where I sold the calls, right? Now, I want to talk about this for a second because this frustrates the crap out of me. I do not have an ES entry over here. I could not get a swing short. And the only thing I could have said was, well, maybe take it here and try to figure out, you know, there was no, the 50-60 was up here. There was just, I just had nothing here, right, to get an entry. So I sold the calls deep in the money with little risk. It would have basically doubled my loss for the day that I already had in options. And and you'll notice with the options, I'll keep taking losses, right? I've said it before, I'll say it again. I take anywhere from 10 to 20 point swings intraday on my options account. Today I was down 4% coming into this time of day. You just got to get used to the volatility with options. There's nothing else you can do about it. Okay? And then what did I do next? I take the risk off. I'm not trying to hit a home run. I'm just trying to take the risk off and go, maybe it works. That's all I'm trying to do. And then Ron asked me in the room, if we got to swing long, would I take the risk off? And after considering what happened here, that is why I said, I've taken the risk off. I'm taking the shot to the upside, but that's all I'm doing. Okay, so moving forward, right, we get down into this area. We get a swing long. I didn't take 1 or 2. So you want to note that trade 1 and 2 failed here, right? Because 1 and 2 have been working very, very well. So you also have to know 1 and 2 failed. I would also note that it failed at 115. This was actually a pretty valid time to take it. And then the trap was up here. So I want you to add, and then we all know that the trap number 4, which occurred right here on this bar, failed. And so I want you to add 1 line to swing number 4, okay? And what I want you to add on the spreadsheet was trade taken in room, yes or no? Okay, so this is no, this is yes. I need to add that. Last hour trade, I think this is a yes. I got to go back and verify. And I got to go back and look at a 50-60. So, no, the trade wasn't taken in the room. The MFE, maximum favorable excursion, was 2.25 points on this trade. And the maximum adverse excursion, now, the stop on this thing was 8.5 points, okay? But the maximum adverse excursion is 18.5. Why do I want to know the maximum adverse excursion? There's 2 reasons. Remember the other day when I got stopped on this trade right here? This is the one that took place on the 3rd, end of the day, took an 8-point stop after 2 scales, right? Your desire, my desire as a trader is I want to move the stop, okay? Great. You want to move the stop? Go for it. I think it's a bad idea. So I want to know what the maximum adverse excursion. So here you would have gone, oh, if I moved the stop, it was only 2 more points and I could have gotten back to break even. It didn't matter where you moved the stop on this trade, right? Didn't matter on this trade right here that we took today. Did not matter where you moved this stop. It went against us for 18.5 points. What does that reiterate? Reiterates our discipline to taking the stop and not moving it. If it hits, it hits. There's a reason for it. And it saved you money today, whether you liked it or not. Hopefully not a lot of people took a full-size trade in the last hour. I would encourage you to at least taking half size late in the day, particularly considering the size of the stop. Most people told me they did not take it. I think I got 1 person who did take it at the end of the day. Okay, next. Were there any scales? No scales. How many points? There's no points put on the board. Was there a 1-to-1 RR? No. Was it a trade taken in the room? No. Right? We'd want to know that because we want to add that to our real trades if we took it in there. Right? And then last, was there a 50-60 retrace? There was. And that's the last thing I want to point out here. Okay? If you look, this entry required an 8.5 point stop. You could have minimized, where was, right here. This required an 8.5 point stop. You could have minimized that stop by grabbing the 50-60, pulling it up to this point right here, and your entry would have been roughly 1954.50. And from 1954.50, we rolled all the way up to 1959.50. It also reduced your stop down to 5 points. You almost had a 1-to-1 RR out of the 50-60 retrace, and it was available to be taken. Again, extremely whippy. last hour, if you have a small account, I do not see a reason why you are messing with this. And this should have registered huge in your mind that there was a massive seller there, and I'd have been very, very concerned. The other thing I want to note is usually on institutional sellers, when they're there, they'll lift for about half an hour, and then they'll come back. And if you look, this guy pressed, then we have, this is the last bar I pressed on, and look, he lived 5, 10, 15, 20, 25, 30 minutes, 35 minutes passes, and then he steps back on it, okay? Same seller was there all day long. He knew something that we didn't know. That's all I can say, unless I misinterpreted something. We're back to the middle of the range, and just looking at tomorrow morning, because I'm not going to review this, so please go over it again. Y'all can email me questions if you have questions over it. But I think I was pretty fair, and here's the deal. In talking to my partners this afternoon, I usually have horrible days on day like today. The fact that I got out profitable on options and flat and futures is totally fine, because I expect, okay, I want to set the expectation, I expect to take 2 stops back to back on days like today and hit my max stop loss. That's because of my history. The thing sweeps down. It never gave me a clean short entry. I would have killed it, right? My read was perfect, but it never gave me an entry. And the only thing it left me with was the crap at the bottom at the end of the day that would have run me over, right? That just goes down in into the this sucks journal, right? So instead, I've improved a little bit over the last 6 months. Instead of the 2 stops back to back, and I'm glad I didn't destroy my account, is I didn't take any losses, right? I'm sorry, not as in apologizing to you, but I'm sorry for myself that I didn't capture the short and the futures. But that's part of the game, and now I'm ready to go for tomorrow morning, fully charged and not worried about getting run over. I hope this helped. I'd like feedbacks if these brief deals help. I'm going to do my best to keep up with all the charts and all my other work that I have to do. And I hope everyone benefited today from some of my insights in the trading. Guys who are used to buying the dips are going to get crushed over the next couple of months. It's going to be harder than it's been for those guys. It should be great for us once this thing, we need to settle down just to drop, but it should be really good for us once it does. So anyways, that's it, guys. Have a great night. Talk to y'all later. See you in the morning.